Welcome to the Deep Dive. Our mission, as always, is to take a complex subject, slice right through to its core, and hand you the insights that really matter, the knowledge you need to be, well, truly informed. And today, we are wading into some very deep, very amber-colored wire. We're exploring that fascinating point where passion, culture, and some very serious finance collide. We're talking about ultra-rare whiskey as a legitimate, high-performing financial asset.
That's right. And for anyone listening who still thinks of whiskey as just, a nice drink after dinner, you might want to buckle up because we've really seen it make this complete transition. It's gone from a collector's hobby to a sophisticated asset class, something you'd compare to fine art or classic cars.
And the hook for this deep dive, the thing that really caught our eye, is a report about a single, frankly, mind-boggling transaction. One bottle of Balvenie, 60 years old.
Yeah.
And it sold for a staggering 1.2 million Danish kroner.
Wow.
That's including VAT, by the way. It was bought by a private collector from a retailer in Denmark called Whisky.dk.
$1.2 million. That price tag, it's just monumental. And it really sets up our mission for this deep dive perfectly, doesn't it? We need to break down exactly how that happens. How does a luxury spirit, something that's, made to be enjoyed, get that kind of financial gravity?
Right. So that's our job. We're going to give you the blueprint for that transition. We'll unpack the factors, the insane rarity, the age, the story behind it, all of it. That can drive a bottle of liquid to a seven-figure price tag.
Exactly. We're getting beyond just, oh, that's a nice old bottle. This is about financial engineering, really, all based on scarcity. So the key takeaway for you listening should be understanding that this market values two things. The quality of the liquid inside, yes, of course, but also, and maybe equally, the irreplaceability of the cultural story that's attached to that bottle. That story, that human element, that's the invisible force that multiplies the value.
Okay, let's start right there with the hard facts of this specific sale. The price, 1.2 million DKK, paid by a private collector. That right there tells you about the demand from, the ultra-wealthy for these kinds of trophy assets.
Absolutely.
And the retailer, Whisky.dk, is a top specialist in Scandinavia. This is crucial because it tells you the market is mature. This wasn't an impulse buy.
No, not at all. It was a strategic purchase through a credible, very focused dealer. And that credibility is everything for the bottle's future, for its provenance and its resale value. But let's zoom in on the bottle itself, the Balvenie 60, because the story of its 60-year life is really what justifies that price.
The timeline is it's incredible. It was distilled on June 29th, 1962.
1962. Just think about that.
And then it was bottled 60 years later, to the month almost, July 5th, 2022. 6 full decades.
And here's the detail that really amplifies that. That entire maturation, all 60 years, happened in a single European oak hogshead.
A single cask.
A single cask. And a hogshead is smaller than a typical barrel, which means more liquid to wood contact, more intense flavor transfer. For a spirit to survive that long in one cask without the wood just completely taking over.
Or without it all just evaporating, right? The angel's share.
Exactly. Without the angel's share taking the whole thing,
Yeah.
It's a true feat of cask management. That single cask status is the #1 driver of its uniqueness. If they'd mixed it with other casks, the story and the value would have dropped instantly.
And after all that time, the yield must have been tiny.
Tiny. Only 71 bottles were released. Globally.
71.
That's the definition of hyper-rarity. It is, without question, the oldest and most exclusive whiskey the Balvenie has ever put out. And the ABV, the alcohol content, is 42.4%.
Which is pretty remarkable for a 60-year-old.
It's amazing. It suggests the storage conditions were absolutely immaculate, preserving the liquid's integrity the whole time.
So you have the physical proof of value in the low yield and the high strength. But you said the story is just as important. The human element.
It's profoundly important because this bottle, it's not just a product, it's a tribute. It was created to honor the malt master, David C. Stewart.
Ah, yes, the legend.
A living legend. In 2022, he celebrated his 60th anniversary at the distillery. He is the longest-serving malt master in the entire industry.
So you're buying his life's work, in a way.
That's it. That kind of lifelong dedication gives the asset this emotional anchor that you just can't manufacture. It turns the bottle from a commodity into an artifact. The report we read calls it a piece of living history. You're buying the culmination of a 6-decade career in a 700-milliliter bottle.
And there's another layer, too, isn't there? He didn't even pick the cask himself.
Right. His protege, Kelsey McKechnie, handpicked it, which just reinforces this whole theme of lineage, of succession, of the craft being passed down, that cultural value, that narrative. That's what lets the whiskey transcend being a drink and become this economic powerhouse.
The ultimate legacy asset. Okay, but let's be pragmatic. Let's say someone actually decides to open this 1.2 million DKK bottle. What are they actually getting? What's the experience?
They're buying the absolute pinnacle of maturation science. It's described as incredibly complex, vibrant, deeply layered, everything you'd hope for after 60 years of conversation with the wood.
So what are the actual tasting notes? What does it smell like?
On the nose, it's all about refined maturity. You've got dark chocolate, these deep cooked-down fruits like figs and plums, alongside that rich oak and spice, just classic long, gentle aging.
And on the palate?
The key word is silky smooth, because 60 years in oak can easily make a whiskey bitter or woody. But this one is balanced. You get the sweetness like honey, but then these savory notes of old leather, a hint of smoke, dried fruits. The wood is a perfect frame, not the whole painting.
And the finish?
They describe it as almost infinite. A perfect balance of sweet and spicy that just lasts and lasts. That longevity is the signature of true quality. It confirms that the money is backed not just by the story, but by a liquid that is, frankly, irreplaceable.
So that's the case study for this specific incredible bottle. Now let's zoom out. How did we get to a point where the entire investment world started seeing these spirits as a viable, long-term financial play?
Right, because the Balvenie 60 is the peak of the mountain, but its sale confirms the baseline truth. Rare whiskey has absolutely earned its spot in the portfolio. If you look at how perceptions have shifted, the last, say, 2 decades have been completely transformative. Investing in whiskey isn't some niche hobby anymore. It's a serious subject, as the source material puts it. You see it discussed in major financial papers because the performance data is it's undeniable now.
But I still hear that question all the time. Why whiskey? Why not just buy gold or bonds? What makes it a hard asset?
That term, hard asset, is the perfect way to describe it. It's a tangible physical resource. It has intrinsic value that can insulate you from things like currency fluctuations or a stock market crash.
It's something you can literally hold in your hand.
Exactly. And unlike, say, fine art, which can be really subjective and hard to sell, or even fine wine, which has a limited lifespan and is incredibly fragile, ultra-rare whiskey has an almost indefinite shelf life if you store it correctly, and its value is global. A top-tier bottle is worth just as much in Hong Kong as it is in Copenhagen or New York.
That global appetite is so important. And the growth figures, they're compelling. The report highlights this consistent, marked growth over the last 20 years. But can we quantify that?
We can, actually. You have to look at specialized indices. The most well-known is probably the Rare Whiskey 101 Apex 1000 Index.
And what does that track?
It tracks the real-world price performance of the top 1,000 collectible bottles of scotch. This isn't theoretical. It's based on actual auction results. And over the past decade, it has consistently shown annual returns that have blown past traditional investments.
Why? What's driving that outperformance against, say, art or even gold sometimes?
2 main reasons. First, the supply is absolutely fixed. As we said, once a cask is bottled, that's it. The supply curve is a vertical line. It's not coming back.
Finite.
Totally finite. And second, you have this surge in global wealth, especially in Asia, where collecting and gifting rare whiskey is deeply tied to status. So you have soaring demand crashing into a fixed supply. That creates massive upward price pressure.
So it's a safe haven asset, in a way.
In many ways, yes. During volatile periods like the 2008 financial crisis, rare whiskey showed very low correlation to major stock indices, sometimes even negative correlation. When the stock market was tanking, rare whiskey was holding steady or even climbing. That cemented its reputation as a reliable store of value.
That's a fair point, but doesn't that also mean the market is, well, unregulated? Maybe a bit too driven by hype and speculation, which would make it riskier than we're letting on.
That's a very fair challenge. It is unregulated compared to public equities, there's no doubt. But the decades of consistent performance suggest it isn't just hype. It's based on verifiable rarity and quality. Plus, the collectors themselves kind of stabilize the market. Many are passionate connoisseurs first and investors second. That passion creates a sort of price floor. They aren't just going to dump their collections at the first sign of trouble.
Let's give our listeners some historical context, some big examples of these price spikes. We can't really talk about this without mentioning the Macallan 1926.
Ah, the Mona Lisa of whiskey.
Exactly.
The Macallan 1926 is the absolute gold standard. A bottle has sold for over 10 million DKK at auction, a world record. It's the combination of the legendary Macallan brand with that impossible age, distilled almost a century ago. It's an extreme example, but it shows you what the ceiling of this market could be.
A more illustrative example of rapid growth might be the Delmore 62 years old. The report notes how fast that one appreciated.
The Delmore 62 is a fascinating one because it really shows you the acceleration of value. In just a few years, it went from about 50,000 British pounds to over 250,000.
A five-fold increase.
A five-fold increase. And that's not just because it got a few years older, it's because the global collector community suddenly woke up and realized this bottle was exceptionally rare and had achieved trophy asset status. Once a bottle crosses that invisible line into being an icon, the price doesn't just climb, it multiplies.
This brings us to what I think is maybe the most powerful concept for an investor in this space, the value of the truly irreplaceable. We're talking about closed or ghost distilleries.
Absolutely. This is where you move from just collecting bottles to curating liquid history. These are whiskeys that can never, ever be made again. Even if the distillery reopens, the equipment is different, the yeast in the air is different, the terroir is gone.
And the classic examples here are Port Ellen and Brora.
The two titans of silent stills both closed down decades ago, but the remaining official bottlings have seen just explosive, sustained growth.
Why? What's the specific mechanism?
Because the liquid is a fixed historical artifact. Every single time a bottle is opened and drunk, the global supply permanently shrinks. So you, as an investor, are not just buying old liquid. You're buying an authentic piece of history, a flavor profile that the world literally cannot produce anymore.
So for the ultimate long-term store value in this category, the advice would be to prioritize bottles from closed distilleries, assuming you can verify they're authentic.
That is the blue chip strategy in the rare whiskey world. The supply is guaranteed to go down. Global demand and wealth are, over the long term, likely to go up. That inverse relationship is the fundamental economic argument for why ghost distillery stock has performed so incredibly well. So if we shift from the big market trends to the factors that drive the value of an individual bottle, it really always comes down to a triangle of three things. You've got rarity, you've got brand strength, and then you have that unique cultural narrative we talked about.
Let's start with the foundation. Brand strength. Which brands are the blue chip stocks of the whiskey world? The ones that offer stability and predictable growth.
We're talking about the globally recognized powerhouses. The Balvenie, of course, is one. But you also have Springbank, which has this massive cult following because of its old-school production methods and incredible quality. You have Yamazaki from Japan leading the charge for that whole category. And Dalmore, which is just synonymous with luxury and very old releases. Investing in those big names gives you a certain baseline of safety. Their reputation is already established worldwide.
And that security is great. But often, the biggest returns come from looking ahead, from diversifying and betting on the future. Let's talk about the new guard in emerging markets outside of Scotland.
Diversification is so important. You spread your risk. And the real excitement, the potential for huge long-term growth, is definitely coming from so-called world whiskey now. We have to be looking at producers in Asia and craft distilleries in Europe who are just racking up awards and building these formidable reputations very, very quickly.
So which specific names should someone looking into this be aware of?
The source material points to a few critical players. Kavalan from Taiwan is essential to know.
Their maturation is different, isn't it? Because of the climate.
Completely different. The heat and humidity in Taiwan mean their whiskey matures much, much faster. A 10-year-old Kavalan might have a profile similar to a 20-year-old Scotch. This unique acceleration, plus their unbelievable success in blind tasting competitions, makes them a real growth engine. Then you have Amrut from India, another tropical maturation pioneer. And closer to home, you've got Stauning in Denmark, representing this rise of really sophisticated local craft distilling.
You mentioned terroir earlier, which is a term we usually associate with wine. How does that concept apply here and drive value for these new brands?
It's a great question. In Scotland, terroir might mean the source of your peat or your water. For these New World whiskies, it's all about climate and local grains. For Kavalan, their terroir is that subtropical heat. It creates an intense, rapid interaction between the spirit and the oak, making these incredibly rich, fruity whiskeys you just can't replicate in a cold climate. That unique flavor, driven by geography, is their unique selling point. and that's what collectors are chasing.
Okay, so let's say an investor's ready. They found a bottle they want to buy. What are the concrete, practical steps they absolutely must take to protect that investment's value over the next, say, 20 or 30 years?
Right. This is where you turn a good purchase into a great investment. The bottle is only half of it. The other half is the documentation and the environment you keep it in.
Let's start with the number one financial safeguard, provenance.
Provenance is just a non-negotiable paper trail. You have to be able to document the bottle's entire journey, from the distillery to you. That means receipts, certificates of authenticity, everything. If that chain of ownership is broken, the value plummets. At resale, if you can't prove it's real and was stored correctly, the risk of it being a fake or damage is just too high for a serious buyer.
Second point, the seemingly small detail of original packaging.
So important. The box, the case, any little booklets or certificates that came with it, it all has to be perfect. Think about any other high-end collectible. A mint condition original box adds huge value. For whiskey, the packaging is part of the story, especially for a release like the Balvenie 60. A damaged box can knock 10, 20, even 30% off the resale value instantly.
And finally, the most practical, physical piece of the puzzle, correct storage. This is where a lot of novice collectors go wrong, isn't it? They want to display their prized bottle.
And that's the biggest mistake you can make. The rules are strict. Dark, cool, and stable. Dark means zero sunlight. UV light will fade the label and can even damage the liquid over time. Cool means a consistent temperature, maybe around 15 to 18 degrees Celsius, to minimize evaporation. And stable means no vibrations, and crucially, keeping the bottle upright so the high-strength alcohol doesn't eat away at the cork. Any investor has to treat the bottle like a sensitive artifact that needs active preservation.
Okay, so we've covered how to protect the asset. Let's get into actionable strategies. For someone listening who wants to get into this market, how should they approach it based on their budget and how much risk they're willing to take?
Well, the good news is you don't need $1 million DKK to start. The market has a lot of different entry points. The key is just to have a clear strategy from day one.
Let's start with what's probably the most common entry point, strategy 1. Limited and numbered releases.
This is the gateway for a lot of new investors. You're focusing on brand new releases from those big established names, Macallan, Ardbeg, Glendronach, for example. They'll release a limited batch, maybe a few thousand bottles, and you try to buy it at the initial retail price.
Which is hard to do.
Very hard. Demand almost always outstrips supply, so they sell out instantly. But if you can get one, your goal is to capture the immediate price jump when it hits the secondary auction market. You can often see a quick 30 to 100% return in the first year or two.
So this is more of a short to medium term play, a flip, basically.
Exactly. You're capitalizing on immediate scarcity and brand hype. The risk is pretty low because you're backed by a famous brand, but it does require being really on the ball and getting access to those retail lists.
All right, let's move to strategy 2. Older and changed releases. This sounds like it requires a lot more research. A slower burn.
It's the historian's strategy. You're hunting for whiskeys that were bottled maybe 20 or 30 years ago, but the value doesn't just come from the age. It comes from the fact that the distillery's production methods have fundamentally changed since then. Maybe they used a different kind of peat, or they changed their stills.
So you're buying a snapshot of a lost flavor profile.
Precisely. That older bottling becomes the benchmark for what that distillery used to taste like. A great example is Macallan from before the 1980s. It commands huge premiums because their cask policies and production have shifted so much since then. This strategy can deliver huge returns, but you have to do your homework.
Then we have strategy 3, single casks. This is all about maximizing uniqueness.
Right. A single cask bottling, like the Balvenie 60, is by its very nature unique. It yields a very small number of bottles that can't be replicated. Investors here are looking for barrels with exceptional character. Maybe it was aged in an unusual type of wood, or it has a surprisingly high alcohol strength. It appeals to the most serious collectors who want something absolutely singular.
And finally, the biggest commitment of all, strategy 4. Cask investment. The long game.
This is the pro level. You're literally buying an entire barrel of young whiskey and paying for it to mature for, 10, 20, even 50 years. It requires a lot of upfront capital and a huge amount of patience, but the potential returns are astronomical because you control the entire supply from the liquid to the final bottle.
But there must be huge logistical hurdles here. It's not just about waiting.
Oh, the hurdles are significant. First, you have storage and insurance. You have to pay annual fees to keep your cask in a government-approved bonded warehouse in Scotland, and you need specialist insurance. Second is taxation. Most casks are sold in bond, meaning no tax has been paid. This makes them easier to sell to international buyers. But you have to understand all the duty implications when you eventually decide to bottle and sell it. It requires a deep, deep knowledge of the distillery's future brand value.
It sounds like a true marriage of high finance and artistry.
It is. You're basically acting as the custodian, deciding exactly when that liquid has reached its peak, both in terms of flavor and financial value.
So let's bring this all back to the portfolio level. For the listener, why is adding whiskey a benefit compared to just buying more stocks?
The benefits, especially for stability, are really strong.
First up, you mentioned physical ownership.
It's the core appeal. You own a tangible thing. It's wealth you can touch that can't be devalued by inflation overnight or wiped out in a digital crash.
And second, and this is probably the most important for someone with a finance background, is portfolio diversification.
Right. As we touched on, whiskey has a proven low correlation to the stock market. During the 2008 crash, when equities were plummeting, the value of rare whiskey indexes held firm. Adding an asset like that to your portfolio can significantly reduce overall volatility. It acts as a financial shock absorber when other markets are in turmoil.
And finally, there's the global popularity and cultural value.
The demand is just massive, and it's spread across the globe, Asia, Europe, the US. That gives you excellent liquidity when you do decide to sell. And beyond that, there's the inherent prestige. You're investing in something with a story, with an identity. It lets you combine a genuine passion with a really robust economic strategy.
That story of high returns is obviously very compelling, but we have to be responsible here. In any high-value, unregulated market, the risks are just as significant. What's the number one threat for a new investor?
Forgeries. Without a doubt. Counterfeiting is sophisticated, it's global, and for the criminals, it's incredibly profitable. When a bottle is worth over $1 million DKK, the incentive to create a believable fake refilling an old bottle, printing a perfect label, is huge. It makes due diligence absolutely critical.
That's a terrifying thought.
Yeah.
And what's the second major risk?
Illiquidity. It's the flip side of owning a unique asset. While global demand is strong, the pool of buyers for a 1.2 million DKK bottle is, pretty small. It can take time to find the right buyer at the right price. You can't just sell it in a millisecond like a stock. So an investor has to accept that their capital might be tied up for a while. Quick liquidation isn't a guarantee.
And even with that low correlation benefit, the market is still prone to volatility driven by hype. How do you tell the difference between a sustainable investment and just a passing trend?
You have to be cold and analytical about it. You see these hype cycles, often around a new limited edition, that push prices to unsustainable levels right after release. A correction almost always follows. An informed investor ignores the short-term noise and focuses on the tangible, long-term factors: age, genuine scarcity like from a closed distillery, and a long-established brand legacy. That's where the sustainable value is.
So given that huge risk of forgery, how does an investor protect themselves? What are the specific steps beyond just buying from a trusted source?
Mitigation is now a battle of technology and documentation. The source has to be rock solid, of course, major auction houses, trusted dealers. But now you need to look for bottles that have modern security features built in.
Like what?
Well, many high-end bottles now use things like laser markings on the glass that are invisible to the naked eye. Or even more advanced, they'll have an NFC tag near field communication embedded in the label.
So you can scan it with your phone.
Exactly. You scan the bottle and it takes you to a digital ledger that confirms its unique identity and its entire history straight from the distillery. Any serious investor should be prioritizing bottles with these features. It adds so much confidence for the next buyer down the line.
And we have to come back to storage one last time. Ignoring that is basically just creating a risk to your own capital.
It's financial malpractice. You wouldn't leave $1 million DKK in cash out in the sun, and you shouldn't do it with a bottle of whiskey. Using a professional, climate-controlled storage service not only protects the bottle, but that third-party documentation of proper storage becomes another layer of perfect provenance. It proves the asset was protected.
When we talk about the ideal whiskey investor, you've really stressed this blend of passion and strategy.
Because the ideal investor sees themselves as a custodian of history. Their passion for the spirit is what drives them to do the deep research needed to spot value. They appreciate the quality, and they're willing to combine that hobby with a smart, patient economic strategy. They understand that knowledge is the real key to multiplying value here.
And it's not just for individuals, is it? Companies are getting into this as well.
Absolutely. For a corporation, a collection of rare whiskey can serve multiple purposes. It's an incredible corporate gift. It's a branding tool, and it's a way to preserve capital on the balance sheet, much like owning fine art. It signals sophistication and financial savvy.
Finally, before we wrap up, it's worth noting that this whole ultra-rare market exists within a much broader luxury beverage ecosystem. The things we're talking about for whiskey, they apply elsewhere.
That is such a crucial point. The underlying drivers, scarcity, age, brand, story, they're completely transferable. The retailer in our story, Whisky.dk, sells a huge range of things, and that proves this collector culture is much bigger than just Scotch.
Right. You see it in high-end champagne where rare vintages from houses like Veuve Clicquot trade like assets. You see it in historic fortified wines like port from Taylor's or sherry from Lustow.
And the market is pushing into other spirits now, too. Ultra-premium, aged tequila, and mezcal are becoming serious investment categories. The whole market understands that if something is produced with extreme quality in a very limited quantity and with a powerful story, it has investment potential. The Balvenie 60 sale is just the loudest signal from a very broad, very deep-pocketed collector economy.
What's amazing is the consistency of it. Whether it's a 60-year-old single malt or rare vintage port, the buyer is paying for a story that cannot be repeated.
That's the essential thread that connects all of these hard assets and sustains their value across generations.
So we've broken down this 1.2 million DKK sale of the Balvenie 60. We've moved past the headline to really understand the financial mechanics at play. And what it all demonstrates is that whiskey investment has matured far beyond simple speculation. It is now a potent, high-performance blend of cultural appreciation, human dedication, and serious financial potential.
I think the biggest lesson here for you, the listener, is that success in this world depends on more than just money. It depends on patience, on deep knowledge, and on a real appreciation for the story that's captured inside that glass. Because that narrative, that's what the next generation of buyers will really be paying for.
And that brings us to our final provocative thought for you to mull over. Since provenance and the historical story are so crucial to a bottle's future value, how much will the worth of today's most sought-after whiskeys 50 years from now be determined not just by the liquid, but by the quality of its documentation, the digital ledger, the photos, the proof of storage? That documentation is becoming the future of the asset itself.
It really is the ultimate insurance policy, something to think about as you build your own philosophy.
Thank you for joining us on The Deep Dive. We'll see you next time.